Hey guys, what's going on? I wanted to talk to you today about life insurance, the dreaded subject of life insurance. I typically don't like to approach people about life insurance because it's kind of creepy and it's kind of weird. No one wants to talk about their death. There are so many benefits, though, with life insurance that you need to be aware of, especially in our community. We have a very limited knowledge of life insurance, and we just think life insurance is about death benefit. But life insurance is so much more than those things. There is an opportunity for you, there are strategies that you can use with life insurance. For instance, an indexing strategy. It's a way for you to grow tax free dollars, and you can utilize that for a laundry list of reasons in terms of growth opportunity. And there are ways that you can strategically structure life insurance so that what you want to focus on growing the most, or what area you are most concerned about the most, can you can drive your dollars into that. So different life insurance products are for different types of situations. So I really get upset and I get frustrated when you have people who preach about term insurance and say whole life insurance or permanent insurance is a bad thing. None of the insurance products are a bad thing. It's depending on what your fit is for. Term can be a great start for someone who needs cover a lot of coverage for a little bit of cost, but understanding that at some point that policy is going to end, but having a goal in mind to work along with the term of the product so that you're in a better situation to do some different things at a different point in time. Because we all know when we were born, but we none of us know how long we have here. So term can help bridge the gap of uncertainty while you work on your goal. You may have a 10-year plan. You may need a 10-year policy. You may have a 15-year plan. You need a 15-year policy. So it can be used for a lot of different things in terms of term. When you're talking about whole life has its place too. When you value the protections and the death benefit, this could be reasons that you may want to look at a whole life policy. But if you're looking at growth potential and index strategies, you may want to look at different types of permanent insurance as well. So sometimes it makes sense in that scenario to do a whole life policy, but usually it may require you doing something with an index universal life policy. So these are some of the different types of policies on a baseline level that you can use for your benefit and your target goals. But sitting down with an agent and gathering information to put together towards what your goals are can help determine which product is right for you. So don't let anybody push anything on you in particular. It should be more or less, okay, what product and what services are going to be best for me in terms of where I'm trying to get to. And that's the type of approach that you want to take. So if you don't know where you want to go, you should start thinking about what you want to do, when you want to retire, how your lifestyle is going to be when you retire. And you can start building that no matter what end of the spectrum that you're on. It pays to start right now. And so when it comes to life insurance, it's more about what you, not what you think you need, but it's more about starting with which what I like to do, the human calculator. For instance, if you're under 35 years old, professionals recommend that you have about 15 times your annual income. Insurance companies, especially the climate that we're in today with COVID 19, uh, insurance companies are very lenient, not lenient, but insurance companies are very conscientious about how much insurance they will allow you to have. You can't go in there just because you can afford it and get all kinds of uh, insurance, because it has to be correlated to your age, it has to be correlated to your net worth, in some cases, and it has to be correlated to your income. And you may be asked to prove that. And so obviously certain professions aren't going to allow you to prove that. So you got to think about those types of things, okay? Now, if you are 36 to 45 years old, then it's recommended that you have 10 times your income, okay? If you are 46 to 55, that's between the 55 and older and the 36 to 45. I'm looking at my little notes on the board. I like to look at that. But that is where you need to have about 7.5 times your income. Okay, that's a pretty safe, solid number. 7.5 times your income. That's between 46 to 55. And if you are 55 and older, you need about 5 times your income. Simply put, someone who's 55, all of the little birdies have left the nest. Uh, they probably don't have as many bills. They probably don't have as many things to be concerned or take care of. In your younger years, you're thinking about, okay, college, you're thinking about weddings, you're thinking about helping your children get that start. But as time goes on, your children may be in a situation where they don't need anything from you anymore. And now it might be just a few things you need to make sure that are tied up in case of your demise. And that's why the number is so low. Now, can you go higher than those numbers? Yes. So if you are under 40 years old, then you can get as much as 25 times your income. Okay? 25 times your income. If you are, and for every 10 years, it drops 5 years. So now you're over 40 years old. Instead of 25, it's 20. When you're 50 years old, it is going down to 15 times the max that you can get. And it just keeps working its way that way. Okay? So, understanding what that means, doing that, I know sometimes people are thinking about the cash value of insurance, but sometimes it's better to get in the game and get what you need to get in the event that something happens, so that any loved ones that you're leaving behind has the financial resources to be able to continue and get where you set out to be. So you have an idea of what your journey is going to be. All right. I'll use the Bible for an example. Moses set out to lead the Israelites into the land of Canaan. But little did Moses know is he was never going to go in to the land of Canaan, but he was going to see it. And it was because of a mistake he made. So is life. We all want to live a long time. We all want to get to be old and healthy and live a healthy quality life, get old, die with all of our family and loved ones around. And it's just not going to work like that for everyone. But we can strive for that. But what we need to try to make sure that we do is say, hey, listen, if at some point I don't make it on this journey, I don't feel it's fair to disrupt, my wife and my children from continuing to go to where my vision was for them to go. The vision that they submitted themselves to. Same thing with a woman. She is a different function in the family, but she is very important to the function of the family. So it's the same thing. If something happens to the wife, then the family should still be privileged to move forward and advance along the lines of attaining that goal that has been set out for the family. And that's why term insurance can be a great start. It's the most affordable, okay? And stay away from those accident and dismemberment plans, okay? I got $200,000 and I'm only paying $5 a month for it. If you didn't get that plan when you were an infant, it's probably not what you think. Have someone take a look at that. But that's basics of life insurance. That those are the things that you need to take into consideration when you're getting life insurance. And look, get life insurance while you can, because you never know what day you may wake up and you develop something or have something that makes you uninsurable and takes you out of the game. So get it when you can, get it while you're young, and your health is your wealth. So value yourself by investing in yourself, a policy, so that if anything happens, you can be a blessing to someone else, whether it be your spouse, your children, or it could be someone outside of that. It could be an organization, something. But we have to develop a mindset of, I want to leave this place better than when I came. All right. So this is Lee. If you need to contact me, you can go to my website at Buckeye Financial LLC, just the way it sounds, BuckeyeFinancialLLC.com, or you can shoot me an email at Lee at BuckeyeFinancialLLC.com. That's LEE. So you can do that. Or you can just go to the easiest thing to do is just to go to my website and then learn more about me, learn more about my organization, and you can actually fill out the contact form, and then we can get in contact with you like that. So I really hope this helps somebody. If you have any questions, I welcome you, and take care. Go Bucks.